Jonathan Lopez. I teach the Intelligent Investor class, and I want to do a homework tutorial for part one, lesson one. We're looking for the Defensive Investors Guidelines for Common Stocks. Graham has a series of criteria he's looking for. Basically, we're looking for companies that are large, prominent, conservatively financed, with good credit and solid earnings. So let's do Microsoft, symbol MSFT. So first thing we want to do is let's go to Guru Focus website, put in the company symbol, MSFT, and then we want to know the market cap, 400 billion. We're going to put that on our spreadsheet here, which means this, yes, they are large. $400. And let's look at their rank. So we'll go to CNBC, put in the symbol again, MSFT. Look at their peers. And we want the top 10 industry peers. We want it ranked by market cap. So yes, Microsoft is number one. Oracle is number two. That's what we want to know. Number one. Look at their debt to equity ratio to see if they're conservatively financed. Go back to Guru Focus. Microsoft, click on the 15-year financials. Scroll down to ratios. We're looking for debt to equity, and we want the trailing 12 months, which is the most recent number, 0.62. 0.62. Current ratio, go back to Guru Focus. Scroll up. Hit summary. And the current ratio is right here. Current ratio 2.9. Coverage, also on the summary page, interest coverage 26.97. Look at their credit measured by their dividend payment history. So scroll down. Dividend history, will change this to 100 entries. And they paid a dividend, very consistent all the way, and it ends in 2003. So the purpose of this homework, that's not long enough. We want 20 years. So let's go to Johnson & Johnson. What is their market cap? We'll put in their symbol, J&J. They have a market cap of 320 billion. Rank in their industry, we'll go to CNBC, put in the symbol J&J. A little bit slow. Pulling up Johnson & Johnson, and we want to see who are their peers. Click on peers. Wait for it to load. Change this to top 10. Ranked by market cap. Johnson & Johnson is number one, followed by Pfizer number two. So number one. Let's see if they're conservatively financed. Go back to Guru Focus. Go to 15-year financials. And we're looking for their debt to equity ratio, so scroll down. Under ratios, you see debt to equity. We want the trailing 12 months, 0.32. 0.32. Current ratio, back to Guru Focus, back up. It's a little slow. Hit summary. I forgot what we wanted. Current ratio. Current ratio is 2.83. 2.83, which is good. Coverage, interest coverage, 41.02. 41.02. Now let's look at their dividend payment history. Click on dividend. Scroll down. Change this to 100 entries. Scroll down, and you'll notice that they have a great dividend payment history. Pays dividend faithfully every quarter. Seems like they raise it every year. That's really good. Going back to 1991, but there's still more. Actually goes all the way to 1972. Okay. Over 40 years, 1972. And what is their yield? Dividend yield is 2.75. 2.75. And let's check out their earnings. If they have positive earnings in the last 10 years. Go to Guru Focus again, 15-year financials. Now, if you don't pay the subscription for Guru Focus, this part will be grayed out. But what we're looking at is to see if we have positive earnings in each of the last 10 years, which we do. If yours is grayed out and you can't see that, if you can't see this trend, you could click on EPS without NRI. This is kind of a backward way to get what you're looking for here. And it'll give us our earnings history. We're waiting for a chart to pop up right here. But in the meantime, we could read and we could see that during the past 3 years, the average earnings growth rate was 12.4. During the past 5, it was 7. And during the last 10 years, the average earnings per share growth rate was 4%. And if we look at this chart, it shows that over the last 20 years, really, the earnings have been above the zero line, and that's what we want. Meaning they've been positive. And if you really wanted to drill down, you could click on this green line, and it'll tell you what the earnings were for each period. But it's suffice to say that it's above zero, meaning they didn't lose money. So has the earnings been positive in the last 10 years? Yes, and the growth rate has been 4%. And that's what we want to know. We want to find a company that's large, market cap greater than 10 billion. Yes. Prominent, number 1 in their industry, at least in the top 25, but Johnson & Johnson's number 1. Debt to equity ratio less than 1. Current ratio greater than 1. Coverage greater than 5. Means they're conservatively financed. Good credit. They've paid a dividend since 1972, which is more than 20 years, and the yield is 2.75%. Their earnings have been positive in the last 10 years, and they've grown at least 3%, in this case 4%. So we found one. The homework is to find 5 companies that meet those criteria, and hopefully this video has been a help.